Hi, I'm Cary Artac, founder and chief analyst of Artac Advisory. Thanks for checking out my video. You may be aware that one of my long-standing focus markets has been the SP 500. I publish a weekly SPY and SPX report which analyzes not only the underlying S&P 500 index, but also the active S&P 500 SPDR ETF. In addition, for many years, I've published a daily S&P 500 futures advisory letter. While all three markets are, of course, highly correlated, given the fact that both the ETF and futures markets are essentially derived from the underlying index, you should know that this video is devoted primarily to providing mid to longer term analysis in the underlying S&P 500 index. Whenever I analyze any market, I always start with the long-term big picture and work my way into the nearer-term focus, given the fact that it is the longer-term structures that generally dominate the overall market direction. Subscribers to my S&P 500 publications know that in February 2013, I called a long-term 3 to 5 year buy signal. This buy signal followed a monthly settlement above a slightly descending 10-year channel top. This formation constructed using the 2002, 2007, and 2009 extremes, at the time found at 1492.76 in the underlying index. While there were and still are a number of upside technical hurdles that I will be mentioning in this video, the ultimate 3 to 5 year target from February 2013 has been a doubling of this channel range. I call it the full channel extension or the double channel extension, and it's currently found at 2338.59 as of this August 2015 recording. It drops to 2337.26 in September, and by December of this year to 2333.29. Since that February 2013 long-term buy signal, all three S&P 500 markets, that is the underlying index, the S&P 500 SPDR ETF, and the S&P 500 futures markets, have been holding within the confines of an ascending monthly channel formation projected off the 2011 pullback low. It's behaved in fairly textbook fashion. As you can see from this sequence, the structure has been quite reliable in containing rotational highs and lows over the last 3 to 4 years. In my S&P 500 letters, I've been advising that the top of the channel can contain monthly or even quarterly highs, while the base of the same formation remains capable of containing annual lows. This on account of my continued longer-term bullish dynamic following that February 2013 buy signal. For the month of August 2015, the base of this 4-year channel is found at 2018.64 in the underlying index, able to contain selling through 2015, and the top at 2266.21 is able to contain monthly or even quarterly highs when tested. Along the way, the rally has most recently been contained by a longer-term Fibonacci wave extension, in this case a 5/8 or 61.8% wave extension found at 2138.03 in the underlying index. The same wave count is found at 213.39 in the SPDR ETF, tested last May when I mentioned in both my monthly ETF snapshot and weekly SPY and SPX report publications that this threshold is capable of containing quarterly buying pressures. It can continue to contain monthly buying pressures as we push into later year. Yet given the fact the longer-term emphasis remains bullish, it's likelier we'll violate this Fibonacci wave expansion above the market before we do the ascending channel bottom below. But I've always thought it better to let the market dictate my actions. So unless you're a near-term trader who can certainly play both sides of the market as it rotates inside this gradually narrowing wedge, you might wait for a signal above or below these structures. Upside, an August index settlement above 2138.03 or a SPDR ETF settlement above 213.39 should resume a fairly aggressive bullish dynamic into later year. The top of the 4-year channel currently at 2266.21 in the underlying index, then expected within several months, rising to 2286.87 in September, 2307.53 in October, and 2328.19 in November. The same respective formation in the SPY, that is the S&P 500 SPDR ETF, is found at 228.89 in September, 230.95 in October, and 233.02 in November. On the other hand, a monthly settlement in the S&P 500 underlying index below the 4-year ascending channel bottom, currently at 2018.65, which rises to 2039.17 in September, to 2059.69 in October, and to 2080.20 in November, would signal 3 to 5 months of aggressive bearish rotation down to the next significant formation, currently found at 1792.49. This longer-term channel bottom rising to 1854.90 by year's end, where the market should bottom out through 16, quite possibly through the balance of the decade. That pretty much sums up the mid to longer term directional dynamic in the underlying S&P 500 index as of this early August 2015 recording. Keep in mind that my S&P 500 publications provide a much more detailed analysis of the market, including trend defining support and resistance levels, descriptive charts, and noteworthy commentary. If you'd like to take any of them for a 2-week test drive, don't hesitate to go to my website, fill out the free trial form, or call me personally at 262-586-2510. I hope you found the video helpful. I'm Cary Artac, and thanks again for watching.